would have failed.
Alright, what is good everyone? So in this video, as you can tell by the title of this video, we're going to be doing a in-depth trade breakdown of what is more than likely my best trade of all time so far. Not going to be my only best trade of all time. There's going to be a lot more better. Now, it's not my highest point trade of all time. The swing trade I had taken last week definitely was, but this definitely is in terms of risk reward, overall quality of the trade, overall profits on the setup. Definitely my best trade of all time. Now anyways, in this video we're going to be doing a in-depth breakdown on overall my analysis behind the trade, show you guys what my pre-market thoughts were, my intraday thoughts, as well as of course showing you guys the entire trade recording as well as the profits. Now as you can see, I had taken this on just two different firms, my 20 Apex accounts and then one MFFU expert account. Now, normally my live trade recordings are all on a live account. Unfortunately, well, not unfortunately, because it's whatever, I still profited here. But MFFU has a 7-day inactivity rule, and I was getting pretty close to that, so I wanted to make sure I got a trade on this account. So, switched accounts, traded on this MFFU account today instead of my live account, just to make sure I didn't get caught up in that inactivity rule. As again, I was getting close to that, so $6,000 here. Here's the account report for the day, as you can see right here, and here is the overall logs for the trades I've taken, the initial loss, followed by the win position, the trim, TP1, and then TP2, and then of course my Apex accounts right here. Here is the account reports, as you can see. Now you will see down here with the trade logs, I ended up selling this position very early. The only reason I did this is because, one, I wanted to cover my initial loss. Again, I was risking a little bit more than I normally like to, because as you guys know, on a 50K account with only $2,500 in drawdown, $600 loss is a little bit more than most people would like, and definitely a little bit more than I liked. And due to that, I wanted to make sure I locked in profits and actually still, like, one, cover my loss, and two, actually get good profits on the day. So that's why I ended up selling super early. My TP was simply EQ of the range, which was somewhere right here, and well, sold there, and that was why I sold, just locking in profits. And I'm going to be continuing to just focus on steady base hits pretty much until I get my first payout on these Apex accounts, because again, these are fresh, well, not fresh because I've been on them for like a week, but fairly new 50K PA accounts, which again, just focusing on my first payout. And then after that, we'll be focused on longer trades, not selling early, and just, you know, overall normal trading. Anyways, now we're going to show you guys the trade recording, and then after that, do the in-depth breakdown. So hopefully you guys all enjoyed that trade recording. Now we're going to get into the in-depth breakdown, the in-depth trade analysis behind why I taken longs, why I was bullish biased, my first entry and my second entry. So the first thing we want to do is quickly take a look at my old YouTube video. When I say old, the most recent one, the one I posted 5 days ago. And within that video, I already gave you guys all the insight and all the in-depth analysis behind why we're bullish on the higher time frame. Go watch this video if you have not already. This perfectly explains the higher time frame and why we should be bullish in the first place. As we know, we're delivering from a monthly and weekly fair value gap on YM, forming a higher time frame calculation with NQ and ES, which is why they don't need to trade into that monthly and weekly fair value gap. Additionally, we also had formed SMT of the previous month low, and again, I go in a lot more breakdown in this video, so go watch this if you want to understand market maker models and Power 3 on a much more, greater scale. Anyways, when it comes to being bullish intraday, why I was bullish going into the morning, the first thing we have to do is break down a little bit of a lower time frame compared to the higher time frame back here. So when it comes to the lower time frame, it's still a higher time frame relative to the 1 minute, but specifically we have to break down what we're looking for going into the week. And so going into the week, if you're in my server, if you're in Dodgy server where I send out public analysis on the higher time frame a few days a week, you will know that yesterday I had specifically stated that we were looking for a bullish open low high close development within our weekly Power 3. And I stated that in order to validate it, that we would need to drop down to the previous day low, which was also a daily busy. Now, initially I was thinking NQ would be the one to drop down to the previous day low, run off the previous day low, tap into this daily busy. But instead what we had gotten was NQ returns to discount of the Friday's range, which was the previous day's range on Monday, while YM, as we can see right here, ran out the previous day low. So that had then validated our weekly smart money reversal, which is why price has been trending higher ever since, well, yesterday afternoon. Now, when it comes down to a lower time frame intraday, what confirmed the higher time frame SMT? So as you know, SMT the previous day low, more often than not, is going to be classified as your higher time frame SMT. To confirm the higher time frame SMT, we need to see some sort of lower time frame SMT, and that is exactly what we got. So quickly go right before 9:30, right before the CPI expansion. What confirmed the SMT, the previous low, and what confirmed the expansion for CPI? Now, as we can see, we never actually ended up running out the previous low again. So Tuesday left the Monday low as protected because there was SMT the previous low attached to that. Now, in terms of quarterly theory, there's an additional quarterly theory concept that can be found at the low of the day, which is also why price never returns to the previous low, ran it out before expanding. And again, I repeated this, or I said this in the last video, I'm gonna repeat myself when it comes to quarterly theory concepts, because as you guys know, I trade Power 3 market maker models and quarterly theory. Power 3 market maker models to tell me price, quarterly theory to tell me time, and overall refine how I trade Power 3 market maker models. The whole reason I'm not talking about quarterly theory publicly is because Day has not talked about any of the concepts publicly aside from his mentorship. So keep that in mind. I will only be talking about quarterly theory within the private portion of my server, and we'll actually be doing this lesson all over again in a professional format, covering the quarterly theory aspects of my trades. Anyways, as we can see right here, to confirm the SMT with the previous low, we then formed SMT with the 1 a.m. low right here. As we can see, we ran that out during 7 a.m. Now, this low is again a specific quarterly theory low. To confirm that, and technically here, this is more of a middle time frame SMT, and I guess it's confirmed to be a middle time frame SMT based off of what forms after. So we have SMT the previous low, a middle time frame SMT here. So SMT the previous low is higher time frame. The SMT right here is middle time frame, and we had an additional SMT right here between YM and ES, both souping was the previous 90-minute low, while NQ fails to do so. So now we had 3-stage SMT at the lows, and that is what had caused price to immediately expand higher. From there, we were then led to what we were looking for going into New York Open. So as I posted in my pre-market analysis, I stated that, okay, bullish higher time frame order flow, 3-stage SMT at the lows, CPI expansion higher. Now, initially, and this is why my first trade had lost, I was thinking that the CPI low was not going to be returned to. Reason being, and I'll quickly show this first, I said lack of a lower wick makes me assume that the data low will not be returned to. Normally, when it comes to data high, data lows, normally we just about always expect the data high and data low to be rated before we go in any given direction. However, that really only applies to if there is a rather significant wick on either end. Because there's pretty much no wick on NQ here, in fact, on any indice, there's no significant wick. I was not expecting the data low to be returned to. I was expecting this just to be expansion, we return the discount, and then it continue off of that. It made a lot of sense. If we had seen something like this, then sure, I would have been more aware that price is likely to return to the data low before expanding higher. But because we did not have that, I was not really expecting that to happen. But anyways, as we can see based on my chart, I was expecting discount of the range to then play continuation to the previous month high. That was my plan. So as we can see, going into market open, going into 9:30, go forward a few minutes. Going into 9:30, this is what we got off market open. We got EQ the range. Perfect. EQ the range is hits. We're within a 15-minute BISI, within discount of the range. And from there, we have an additional lower time frame SMT. As you can see right here between NQES and YM. I was like, okay, great. We have everything checked off to take a long. And from there, my initial plan was to enter off of the 1 minute CIZ as stop loss at the swing low, TP at what was the previous month high, roughly around here, and it looks great. Just under 1 to 4 risk reward, which is on average what I look for. Unfortunately, the very next candle decided to displace aggressively higher. Instead of a 1 to 4, just under 1 to 4 risk reward, we instead were given a 1 to 1.6 risk reward. And I'm not really comfortable with that. Anything under 1 to 3, I really try to avoid a take. 1 to 2, a little bit over 1 to 2 is bare minimum. Depends how convicted I am behind the trade. And due to that, I'm like, okay, I can't enter off this alone, especially not with my full size. With 1 mini, it could have been fine, but with full size, not gonna happen. So instead, what I end up doing, as you saw in the trade recording, was try to get filled off of this wick. And specifically, I classified this as a breaker block. So I was expecting price to return into that, pretty much wick down and then expand higher off of that, which is not normally what I look for, but it's a little bit lower than the CISD. It's like I have to imagine myself if I were to enter off the CISD and just imagine myself if I was already in that position. So I initially was planning for that, but never ended up getting filled. Instead, what we ended up doing was NQ returns to this 1 minute BISI while forming a crack and collation to previous 1 minute low. And due to that, and due to the fact that my first position did not get filled, I instead tried to enter off, or not tried to, I did enter off the 15-second CISD right here. This TP was the exact same at the previous month high, which was around there. And that was my initial first trade of the day. And this was just over a 1 to 2 risk reward, which again is not the most ideal, but I was pretty convicted behind the drawn liquidity, so I was really expecting us to just expand higher off of that. Now, obviously, I was wrong. We ended up displacing aggressively lower. Now, here's the thing. This was a inorganic move. What I mean by that is this was a move done by a third party, specifically due to Trump talking on Truth Social. So he said on Truth Social that he's considering allowing a major lawsuit against Powell. I would sue Powell over construction of Fed buildings. He said that at 9:44, and that is not good for my entry, because what do we see at 9:44? That is when price displaced down aggressively. And would price have expanded to the previous month high had he not said anything? Who knows? I don't know. All I do know is that I properly managed my risk. It was just a trade that lost. That's all there is to it. I can't blame Trump for it. Stuff like that happens. I know that's, a risk in trading. I can't complain about that. It's just a part of the game. What I can do is then look for another entry. So that is exactly what I ended up doing. Simply had waited. Price expanded lower, specifically to the data low. So as price was expanding lower, obviously I saw that Trump said that. I'm like, wow, that's crazy. Anyways, everything seemed to check off that. Anyways, I said that I'll be looking for the data low to be rated before looking for another position. And from there, we see the data low, as I pointed out on my chart, ran out the data low within a new dog, and initially was looking to see if something would set up off of that. So price raids the data low, specifically forming a cracking correlation with the data low. As you can see right here, ES and YM both failed to run it out, while NQ does so. And now this is where my entry takes place. Now on top of so there's a lot of things lining up here. So in terms of classic ICT, we had a new dog. We were tapping into a discounted 5-minute order block, discounted 15-minute order block right here, while tapping into that new dog. In terms of basic quarterly theory stuff that Day talks about in his YouTube video, we were also below our 2-month open, below our 2-day open, below our 2-week open, which was also where that new dog was. On top of that, on the 5-minute and 15-minute time frame, I'm going to stop this chart for a second and see if you guys can see exactly where the cracking correlation takes place. 15-minute time frame, 5-minute time frame. Do you see the cracking correlation? If you see it, congratulations. That was my confirmation to drop down to a 1-minute and then a 15-second. If you see it, congratulations. My entry was based off of the 15-second CISD, based off seeing everything that I just listed beforehand. On top of that, all those cracks and correlations on the 15-minute, the 5-minute, and the 1-minute, that validated me to enter off this 15-second CISD. TP then was, again, exact same place, the previous month high. Now, would I have just entered off the 1-minute CISD? Yes, if there was a 1-minute CISD within this kind of the range. Our 1-minute CISD was all the way in premium, which is why I was not interested in looking for a 1-minute CISD. What I could have done was, of course, waited for a 1-minute inversion, but I was not interested in that. I had everything checked off for a 15-second CISD, so that is why I had waited, or I just entered off of the 15-second CISD right away. And that was my entry for the second trade. Again, pretty simple stuff, and that was go back here. My specific entry was, we'll show it right here, 138.25, and I had a 1 to 12.72 risk reward. That was my entry. We'll show the 15-second time frame. And again, the only reason I got a little bit more of a discounted fill is because of, well, I market ordered everything. So we had the 15-second CISD. We immediately wigged down right after forming that 15-second CISD, which is why I got a little bit of a better fill. But that was ultimately my entry, and this was my executions for the day. Now again, we can see right here, Trump talking inorganic manipulation. Again, everything was still checked off for longs. We still had every single crack calculation on. We just play that out. We still were holding every single crack calculation that we had prior to pre-market. Due to that, nothing for longs was invalidated. Higher time frame was so bullish. We're still holding every single crack calculation within price. Everything still pointed for longs. Now, when it comes to a market maker model, I did not notice we were in, obviously every single trade I take, I always know we're within a market maker model, but I didn't see the specifics of that until I saw this. I'm like, wait, this looks like a textbook market maker model. And what I meant by that was this. I'm like, oh, this is literally a classic market maker model. As you can see right here, okay, so the original consolidation here was a little bit sketch. It really doesn't matter where you draw from. And finally where I have it drawn from is overall this entire expansion higher. Now the reason for that is, one, in the sense of power 3, in the sense of looking at it as 1 hour power 3s, 9 a.m. to 10 a.m., 10 a.m. to 11 a.m., and then 11 a.m. to 12 p.m. That was my market maker model in the sense of power 3. 9 a.m. engineers liquidity, we failed to run out the previous 9-minute high up here, engineer liquidity right below it, giving us our original consolidation. We displace down, we get a first stage redistribution, second stage redistribution, smart money reversal. Displace higher, first stage reaccumulation, second stage reaccumulation, expansion higher, to our external drawn liquidity above our original consolidation high. And from there, obviously that does not make us bearish. We just had a choppy trend higher the rest of the day. But again, take note of this. all the clean price action, all the volatility was seen within this market maker model. Once that market maker model was completed, once our external general liquidity was hit, that's when volatility slows down. Even though we still had a good trend higher, we can see very clearly that volatility here, pretty much just died off. It was not clean whatsoever. But quickly show you guys the power 3 that I'm talking about. Go back right to 12 p.m. right here. We have our original candle range, the original consolidation, which is the 9 a.m. candle, smart money reversal, 10 a.m. stoop C, 9 a.m. low, expansion, then the 12 p.m. one continues it. That was my market maker model. Now, again, like I talked about earlier, not covering the quarterly theory aspects of this trade, but if you want to learn more in depth, feel free to study under me, join the server, and feel free to check out my inner prospects. That is where I teach my entire model. We do live calls 3 to 4 times a week. We'll be breaking down this trade in depth either tonight, potentially later in this week. It depends if I finish the script for the video in time. If I don't, it would probably just be tomorrow or whenever the next day that I don't take a trade is. Anyways, hopefully you guys enjoy this entire session. Hope you guys learned something. And if there's any questions, feel free to either list those in the comments below or join the server, ask them in there. But I'll catch you guys all in the next video.